Hey everybody, Eddie here. Going to do a market update for next week. We had a pretty interesting week. The SPX actually held the range, so it's still right underneath that megaphone trend line. So it came down and retested that 3900, went broke through it slightly, and then the next day we got that big engulfing green candle on OPEX. Right. So this could be like market maker manipulation just to make all the options expire worthless. So we got a big giant rally, but it still did not break through this area. So we're still looking for the same things as we did last week, which is one, we either break down below this 3800 low and continue lower, or we're going to break out and retest this 4100 area, come back, retest, and then go try that 4200 and possibly 4300, right? So we're still looking for the same thing for this week. Although this engulfing candle seems very bullish to me, I'm still being very cautious to see what happens next week. I am looking for either on Monday, staying break above this high and staying above it. Hopefully break 4,000 and then go higher. Or if we go up and retest this 4,000 area and get rejected, I'm looking forward to come all the way back down. So that's the plan for me for next week to trade off. At this moment, it does look fairly bullish. We are making a higher low right here. All I'm looking for right now is actually a higher high, which is breaking above this 4,000, coming up to this around 4,100 and break through it. Right. If it breaks through this 4,100, we create a high, low, higher high, and then possibly a higher low, and then continue higher and break out this thing. Statistic wise, usually if January finished positive after a very negative year, it could finish the entire year green. So that's what I'm looking for. If next week we stay above and we stay green, there's a very high possibility that we're going to have a green year. So keep very close eye on how we close the end of the month. All right, so if we look at the monthly chart, right now we're green, right? So if you can stay green, meaning staying above 3850, we could have a green month and then possibly get a green year, right? So that's what I'm looking for. I really wanted to stay green this year. So I'm looking to get back to swing trading, and the only way to do that is to break out this megaphone first. If we don't break out this megaphone, I don't do much swing trading because we're still in a bear environment. So I end up just day trading every day. But once we break out this thing, I'm going to start deploying some of the cash that I park for my longer term positions, and be looking for some bargains after we break out this area. If you look down here, this is the amount of stocks that are above the 200-day moving average. As you can see, we've broken out of this trend line that was during this megaphone, and then we're coming back, we retest, and we're looking to go higher. So pay close attention to this. If this start bouncing and making higher highs, it's likely that we're going to break out this megaphone and going to continue higher. So that's what I'm looking for. I'm looking for this as well to break out. So meaning that a majority of the index is above the 200-day moving average, which pushes the stocks back up. Right. The sectors that are weak in the S&P 500 are the tech names and the growth names, right? So the value names are actually quite high. It's just that the tech names are not moving. So, if the tech names start catching up with the value names, then it's very likely we're going to get like an explosive move up, because the tech names usually what leads out the index, and it holds the most weight on the index. So once the tech names start picking it back up, it's likely that we're going to go much higher. So pay very close attention to that, and maybe set a watch list for your FANG names to see what they're doing. So if the FANG names actually start breaking out of their downtrend, it is likely that it's going to pull the whole S&P 500 back up. So that's what I'm looking for this month. Take a look at some of their other names like Dow. So the Dow was showing the most strength, but in the past week, it's showing a little bit of weakness, right? It's broken out of this megaphone already. It retested, bounced it, but it did not make a new high, right? It made a lower high, and it held Friday, but it's below the moving averages. So we're gonna have to see if we actually come down and make a lower low. If you makes a lower low and retest this again, it's possible that you can break back into the megaphone. If it doesn't and it bounces off, then maybe we'll get a strong rally off that bounce, right? So that's what I'm looking for the Dow as well. And I'm trying to look for confluences on the indexes to see if they're all moving with momentum. If they all start moving with momentum and volume start picking up, it's likely that we're going to go much higher from there. So pay close attention to the FANG names and look at these indexes to see if they're all moving together. So IWM, it looks like it's creating a nice base here. You see how the moving averages get all stacked together in one area now around this major support area. So this area has been acting as a support for a while. It was resistance before, now it's acting as support, made a double bottom off here, bounce off. It did not make a new high, but it's just basting, right? So once you start basing like this, all he has to do is break out of this base, and then he's going to get a very sharp rally up, right? So there's a lot of smaller cap names that are moving right now, and a lot of money is flowing into these names. Means that there's risk is coming back to the markets. So if that's the case, then this sector is going to perform really, really well in that type of environment. But the only thing you need to be careful with is these type of names, they tend to go parabolic up. They also come parabolic down. So you need to really apply your risk management. So if you're going to trade these growth names, you want to catch them on the momentum moves up, but you want to get out really quickly when they start turning against you, right? These are not the type of names you want to hold for long term, right? You just want to trade them. So that's what we do. Like in 2020, we made a lot of money trading these type of names. If you don't get out of them fast enough, you're probably down by 80%. That's how fast they can move, right? So just be very careful when you're trading these small cap names and high growth names that has no profits just yet. It's just you're basically buying the story and then trading the technicals, right? That's all I look at it. It's not investment, it's more of a trading vehicle, right? So MDY is the mid caps, and it's holding well as well. It's breaking out of this channel. It's retesting, it's bouncing off this channel. I'm looking for it to break above this 480 area. Once you break above 480, it's most likely test 500 and then go higher. So that's what I'm looking for. Same thing, like you can see that it's breaking out of this downtrend on the number of stocks that's above the 200-day moving average on the index. So about almost 60% are above the 200-day moving average right now. So that's a really good sign. And if you start climbing on this, you're going to get a rally up. And then once you start seeing this topping around that 80-90% area is when you start rolling over like it did right here, right? So you can see once he hits that 80-90% area, it stays up, and then you'll be looking forward to start rolling over like it did right here, right? So that's why I look for confluences of a bunch of different indicators and internals and breaths to see if it's all going in one direction or not, to give me an idea what to trade with, right? One thing that's interesting is Bitcoin. Bitcoin is breaking out of this base. I completely missed this move because I said I wasn't going to touch it. And then create like this big cup and handle right here. Created a cup and handle last week, and we blew out of that. So right now we're at this resistance right here, and possible is going to test this 25,000 area, right? So if you actually base around right here, let the moving average catch up to it, and then it's going to break out and then test the 25,000 area right here. It's likely that you'll get rejected around that level, right? Around that 25,000. If it doesn't, we're going to come all the way up to test this supply area right here, which is 30,000. This is the hard stop right here. So if it actually goes up to 30,000, it's likely it's going to get like a big down move from there, and then possibly a breakout or continuation down afterwards. But right here is what I'm looking for, aiming for 25,000. I did trade a little bit of it on the weekend for fun, just a very small position. It's more of a trading vehicle than an investment for me. So I'm just watching this. A lot of the miners are actually going up parabolically. They all already went up like 2x, 3x. So those moves you pretty much missed them already. If you try to chase it, make sure you keep a very tight stop on those, because they tend to fall quite fast when things don't work out. The VIX, it is still hovering around below $20 area. So this is the zone that you're looking at right here. This is the base, right? So every single time we touch this base, we tend to get a big sharp up move, which means that the SPX has a sharp reversal to the downside, right? So you want to pay very close attention to this. Make sure it doesn't go above this area right here. If it goes above this area, it's likely that it's going to pick up a lot of momentum to the downside, and then you could get like a sharp down move. But as long as you're just staying around under 20, between 15 and 20, then the market can cautiously keep going up and up and up until things change, right? Because once the volatility drops back to below 15, you're in the bull market, like we did back here, right? But right now we're just getting close to that 15 area, between that 15 and 20. So it's still a cautious area. And potentially it still can bounce right here on the VIX, which means that there will be another leg down for the SPX. So just pay very close attention to that to make sure that it doesn't do something like that, right? So if it start breaking above like this 23, it's likely it's going to go to around this 26, which means there's a little pullback on the index. All right, let's take a look at the growth versus value. So you can see right here, value is kind of stalling now around that area. It's making like a few tops right here. It does look like a little bit of inverse head and shoulders. So it's looking for it to break out and make a new high. If it does, then it's going to pull the index up as well. If it doesn't, this will be the area it's going to get rejected on. You can see the supply right here. Majority of supplies around this area right here. So if it's going to reverse, this is the area it's going to reverse back down. If it's going to break out, this is the area that you need to break to go higher, to make new highs. So pay very close attention to which side is going to break. You might want to set some alerts and then just draw kind of like a box like this to see which side is actually going to go. So this is the growth name of the sector, right? So if you can see, we're still in a very much downtrend. It is kind of like a fallen wedge right here. Is getting, the range is getting tight. It's starting to base. So if this base actually breaks above this high right here, then we can actually blow up and start testing this area right here. And the growth themes, once they go really, really fast. So they kind of go parabolically like this. So these are very sharp rally ups. So if it picks up momentum, you could get a sharp rally up like this. So don't be surprised if suddenly all these growth names and the FANG names get like a sharp up move. Is when once they break out this, they're gonna get a very sharp move up. So pay close attention to that and see if you want to look for direction. That's what you're looking for. Forget to actually look at the cues. So the cues, yeah, the growth names and the cues look very similar charts, and you can see that this trend line is holding it down the entire time. But as you can see, the range is starting to get tighter and tighter. That means there will be a big move coming pretty soon. It's been testing this bottom 3 times and bounce off this bottom. It's holding up this level. It's looking to break out of this area. 300 would be the area you really want to break out of. So if it breaks out this 300, it's going to test this 335 and then possibly 370 on the way up. So have this and set your alerts around these areas right here. So if it breaks the bottom end of it, you're looking at this 240 and then possibly going back down to like 200 area down here. Or it's going to break up and we're going to start making higher highs, higher lows, and call this the bottom of the bear market, right? So these are things that you want to look for. Just one thing you want to pay attention to, one thing from historic facts is that bear markets usually don't end until the Fed start pivoting. But this year it is a little bit different. Usually people tell you not to fight the Fed. Well, that's what the market's doing right now, is fighting the Fed, right? So they're trying to call the Fed bluff on the rate hikes. So they're trying to anticipate a move on that the Fed's actually going to lower rates sooner than later. So it is what the market's trying to anticipate right now. And if they're right, then possibly this is the bottom. If not, then a lot of people is going to get trapped in this, and then it's going to have another leg down, right? So, but we trade technicals. So if things go in one direction, we go with the direction. And once things change, we just switch to the other direction. So this is why I don't swing trade, is because, it's that area where it's very hard to predict on direction. And when there's anything that's related to news events, I really don't want to swing trade because uh, news trumps charts, right? You can have the best looking chart, and then all of a sudden some news event comes in, and then it completely breaks down, right? So that's why I don't swing trade in these type of environments. I just day trade, right? I look for setups short term, and I'm going to trade short term setups until things change, right? You want to have a predictable market before you start deploying all your money, right? If you have a prediction, a predictable market, it's easy to trade. That means it's easy to make money off of it. In this type of environment, it's very hard to make money off of it. Because you could get like big up moves, you could get a much bigger down move. So you can't really hold anything too long. And when things change, you really got to get out, right? And if you don't want the stress, just sit on the cash, wait for the stocks to come to a favorable area to start deploying the cash, and then just go in at that time and just, go in slowly and back into the market, right? So that's what I'm looking for right now. I'm looking for these key names to hit certain areas where I can start deploying some money. And then once the trend changes, I am going to start averaging up into these stocks as they move up, right? You only want to average down with a plan, dollar cost average position, right? Meaning if you're going to buy 1,000 shares, I'm buying 200 here, 200 here, 200 here, 200 here, and then on the way back up, I'll start adding, right? So you got to have a plan. If you don't have a plan, just like, oh, hit the bottom, I'm going to go all in. That's the worst way to trade because you never know when it's the bottom. I've seen stocks that look like it was the bottom, and then it'll drop like 80% from there, right? So you want to be very careful. Try not to predict bottoms at an exact point. You always want to average into a bottom and then save some cash and average up into the momentum, right? That's the best way to trade the longer term if you want to try to get very high quality stocks at deep discounts, and then not risking all your money at the same time, right? And if you want to do that, just scroll through some sectors that you like, right? And then look at their sector charts to see what's moving. If their sector is trending, right, then you can actually just find stocks within that sector to trade with. If that sector is not trending, then it's likely that money is not flowing to that sector, and you should move on to a sector that is actually trending, right? So like right now, like Chinese stocks are trending, right? It's up. It has this nice bottom base. It's breaking out. It's above the 200 already. So that's one sector you can look at to get into, right? This one I tried. This is medical devices. You can see right here it's above the 200. It's around the same area. Double bottom bounce. Neckline is right there. If it breaks above the neckline, then it's buyable, right? So it's stuff like that you look at, you look at the growth themes, it's still weak, right? That means be cautious in this sector because it's still weak. It's not above the 200. We're still in a downtrend. So that means like even they look cheap, that means that you're still not ready to actually deploy a lot of cash in that sector just yet, right? Unless you're looking for like the next 5-10 years, then go ahead and deploy some money. But if you're not looking to hold for that long, then this is not the sector you want to get into right now, right? Same with SMH, right? SMH is just start breaking out of this base right here. It needs to get above this peak right here and get above here to go to this 250 and then possibly trending back up. Right now it's just the start. It's above the 200, so it's just spacing above this. So you have to watch very carefully to see what it does afterwards, right? If it start moving, then you can start going back into some semi stocks, right? That's the type of things that I look at. Is I always look through the sectors to see what's actually performing versus what's not performing. If that sector is not performing, I'm not looking to trade that sector at all, right? So like right now, the growth themes are not performing. So I'm not really looking at FANG names to say going in to average into a FANG name to go higher, like averaging up into a FANG name. I'm more looking for where is it going to hit to start a position, small positions, right? Because I'm still looking at the FANG names. I'm just not deploying money into them aggressively, right? I'm going in nibbling at certain areas, and then I'm going to see if it actually moves. If it moves, then I'll add. If it doesn't move, I'll wait for the next big level down before I add anything to it, right? And that's the best way to get the best price while it's weak, knowing that eventually they'll go back up, because these names, they're definitely going back up. It's just a matter of when. So you wait for the key areas to buy in. You don't try to predict that it's going to a certain level, right? So like Apple right here, it's bouncing off this support right here. You can see right here, this is where majority of supply demand is. So this is called a heavy demand zone. So this is a good area to nibble at it. But once it breaks below this area, you can see there's absolutely nothing between there and here. Meaning if it breaks this 110, it can come all the way down to 80, and that 80 is where I really want to buy, right? At this area, I can nibble at it, meaning if I'm going to buy 1,000 shares, I might buy 200 here, but I'll be buying majority of that 1,000 shares down here, right? So I can predict that. I could plan that as a way to dollar cost average into my position, right? And this is more for longer term anyways. And then and when I'm deploying, I'm talking about 1,000 shares equals 50% of my max precision in a downtrend, right? That's trying to capture a discount price at a high quality stock. And the only way I would do this is on high quality stocks. I do not average down on any other type of stocks other than like these very high quality companies that make money and have a big wide moat, meaning nobody can get into that sector other than them, right? So like Apple has a big wide moat. So Apple would be a stock that I'm looking at to average into a stock to a certain price. And then I wait for it to start trending back up. And on the way back up, I will start averaging up into the stock, right? So AMD right here is also basing still in a very defined downtrend. It's not above the 200. You see I set my lure at the 80 right here. So if it actually breaks above the 80, it's a higher high because we have a higher low right here off this bottom. You're looking for a higher high to trend change, and then you can start going into the stock if you actually start moving up. If you want to average into the stock, at 60 is a good area to start a position, and then you could go with around 40. And then at 30 is where you really want to load up if it comes down to 30. Likely that you won't, but if it does, that's where you want to go in heavy with. So Amazon's in this demand zone right here. This is a high demand zone. So it's not bad idea to start position right here. And then if it actually breaks back up, it creates a base. This is a good area. Then once you see the base, you can start averaging into it and buy the breakout. But if it actually does break this bottom right here, you're looking at around that 60 to 40 and 50 as key zones. If it comes down to these key zones, I'm definitely buying heavy in. But right now it's just around this demand zone. It's chopping back and forth in this demand zone. So you can actually sell some puts in this area to grab some shares. If you don't get the shares, you at least collecting premium on cash that's just sitting around doing nothing. So that's what I've been doing. I've been selling when I was down here, selling puts at 70 and 75. Right now I'm looking to sell some puts at around that 80 because it looks like it's basing. There is earnings coming up, so you could catch a pretty quick premium, and you can lowball the premium to see if it actually drop back down at earnings. If it does, then you'll get the stocks cheaper. If it doesn't, and it actually pops up, you collect a little premium. So it's kind of like a win-win when you want to own stocks down here. So I kind of try to take advantage of stuff like that to get them a cheaper price. Meta, it's looking like it's trying to create like a little base here. It's aiming for this area right here around that 155, 160, 150 to 160, let's call it that zone. All right. So this is the zone that it's looking to get to. And then once you hit that zone, it's likely that you could get rejected, but they do have earnings coming up. So if the earnings are good, it can actually break out and test this 180, 200 area. if the earnings are bad, you're likely you're gonna get the next leg down, right? So pay close attention to that. If you want to go into it for longer term, I mean, 80 is a good spot to get into. 100 is good to nibble at it, and then if it actually comes down to around that $60 area is where I really would want to deploy some cash on that. Google, it has a nice gap up on Friday on Google. And it looks like it wants to run into this 100 after it breaks 100, it's like 105 ish area right here. That would be the short-term target. You see how wide moving averages are right here? That means that it's not going to just break out and continue up. It's going to most likely hit it and then come back down, right? They do have earnings coming up, so if they move into earnings, they could get kind of like buy the rumor, sell the news type of thing. If even if they have good earnings, they could like come back down on earnings if we run into earnings, right? So that's something you want to look at. I did sell puts on this thing. It was decayed like 60 or 70%. I kind of took it off. I'm waiting for it to come back down, sell some more puts, just to grab a little bit of income and also try to get the shares on it cheap. So this is the area I'm starting a position on, and then if it comes down here, I'm going to add a much bigger position. So these are the two areas I'm looking at to get into on Google, and Google is something that you can hold long term. So you know, getting it at these cheap areas, it's a no brainer for me. And it's not like I'm going to deploy all my cash, right? So I'm going to allocate about 50% of the position in these two areas, and then once you start basting and then breaking out on the upside momentum, I'll add on to it. Microsoft, same things, just this very tight range is looking for direction, is trying to base here. And what you're looking for is the moving averages come together in one area and then a breakout, right? So that's why I'm looking for on this. So if it breaks out, then, you know, I can start adding and possibly just aiming for around this area right here, 290, 300 area as my first target to trim, and then if you actually break back out, and then I'll add back onto it, right? So that's why I trade these. Netflix, it went up after earnings. It broken out of this resistance, that gap resistance. Now we're looking at this $400 area as a possible target, right? So if you want to trade this, since earnings is done now, there's really no risk on the earnings side. You can actually start selling some puts or spreads on this thing to ride this onto this area right here. If you have short-term income that you can do, if you can also swing this into there, just set a stop probably below this area right here. So you got about the 10% risk. So if you set a 10% stop on here, you possibly could make maybe 15, 20. See. Yeah, about 20%. So you're risking 10 to make 20, so that's a 1-for-2 risk reward. That's a okay trade that you can do if you want to make it. Okay, Nvidia. So Nvidia has this nice cup and handle pattern right here. As you can see, like there's the head, there's your left, right shoulder. Necklines around like somewhere along right here around that 190, 195, 200 area. So it looks like it broken out the 200, tested right here, came back down, tested right here, retest, and now it's stacked together. If this breaks out, right, 200 would be your target. Once 200 is broken, then you're looking at this area right here. This is the bottom. And then the peak supplies right here, right? So you're kind of looking at this more as a zone. So this would be your zone and target. So if he hits this target, it's like he's gonna come back, maybe retest and then break out, right? So if you want to trade Nvidia, this is the way you can go in. It's right here. If it goes below this 130 thing, it's likely the trend's done. If I were going to trade this, I would set a pretty tight stop on this. Maybe just right here, 159, 158 area. So that's $20. So 160, about 10% risk right there. So 10% risk. And then if I want go up, to around this area is about 20%. So risking 1 for 2. So that's not too bad that you can make that trade 1 for 2. And that would be the way that you can trade it. If you even want to lower your risk, all you have to do is use the options to leverage that move. Right, you can sell in the money spread or at the money spread if you want to, right at this area, with a defined risk, right? Because if it goes up, you're gonna make about 2/3 of that spread. If it goes down, you lose 1/3. So that's not too bad. Tesla. So Tesla is interesting. It bounced off this 100. This week the max pain was at 130, so it's right around that level, 130. And it's possible that it can rally up to 150 or 160 before the rejection. So there's a short-term move there. It is in a very well-defined downtrend, as you know. So if it actually comes up, hits 150, 160, and it comes back down, creates a higher low, it can bounce back up. So this could be the bottom. If it does, if that's the scenario, right? It goes up, comes back, makes a higher low, and then makes a higher high. That's the trend change, right? If it doesn't, it just goes up, hits 150, and it makes a lower low, breaks 100. It's coming down to 60, right? If it makes a lower low, I'll be shorting it to 60 or 70 around there, right? And then I'll switch back. I'll buy some leap options. I will buy leap options at 60, and I'm gonna buy it heavy, right? Because I'll be looking for it to get a very sharp rally back up to at least 100 from 60. That's an easy double or triple with options. So that would be the play I'm making if it comes down to $60 area, right? I'm gonna set my alert right here actually. So that'll be area I'm looking at. I'm also gonna set alert at this 150 area. So if it hits 150, I'll be looking at to see if there's a rejection play. Then I'll be shorting it down. If it does, maybe this would be an area where I can swing it on the short side if it gets rejected right here. So I could buy some puts for maybe a month out and then short it down, or even sell some just in the money call spreads to have a defined risk, and then just have it short down to around this 80, 60 area, and then I'll be loading up around down here. Right. If you really wanted to, you can actually get into it right now and sell an at the money straddle, collect that premium. It's a pretty hefty premium that you can collect, and then it'll give you about 20 or 30% downside protection from that premium. And then all you have to do is add it once it comes down right here. So you can start precision, sell that, and then it doesn't matter which direction it goes, you collect the premium, because if it goes up, you get rid of your shares, you collect that, say 30% premium. If it goes down, you have 30% premium protection. You own just a small portion of the shares anyways, and you're going to add down here anyways. So that's a way that you can play it, right? That's the way I was going to play it. And for this week, but they do have earnings coming up, so your premiums will be a lot higher. So you can collect that premium, collect that 30% premium, or if you do short term, you can collect like 10 to 20% short term. So that's a pretty good income that you can collect if you're going to hold this long term, anyways. Right. So that's one of the things that you should consider. You have to have a plan on what you want to do at these levels, right? At this level, like say I plan on 500 shares, I wouldn't mind buying 100 shares right here and then selling at the money straddle to give me my second 100 shares, as well as collecting about that premium. And then if it doesn't move, I collect premiums on both sides. If it does move, I'm collecting a very hefty premium for the risk I'm taking, that I'm going to take anyways, because if I'm going to buy shares right here, I might as well collect some premiums on that, and then knowing that I'll be adding onto down here anyways, right? So that's the game plan. Anyways, that's it for this week. For the agro's been pretty good this week if you actually follow it. So this is on Friday. You have a nice hour right here by. It just went straight up from there. Same with the 2-minute hour. You could have caught the entire move up, and then there's a little consolidation right here that you could have bought back into, and then you could have ride these two waves. You could have made a lot of money. If you look at the hourly algo, we're still in the buy on the hourly as well. So meaning that we still have room to move. If it really wants to go, you still got lots of room to move. And your targets are right here around that 4,000. So this is the area I'm looking for hitting at 4,000. 4,000 will be extended, right? Well, it'll get extended and then you'll get some sort of pullback and maybe a breakout, right? That's what I'm looking for. If it gets rejected fully, come sharply down, that's also the area to look at, 4,000. So next week, pay very close attention to around that 4,000 zone for some sort of rejection. If it breaks out, then it can trigger a short squeeze at 4,000 because there'll be a lot of people shorting at 4,000. So if he actually breaks above it and then makes everybody cover because their stop is probably at 40.20. If he breaks above that, he's going to trigger a short squeeze, right? And if you go through the week, there's this would be the day that would suck with the algos right here, where it's going sideways like this. This is where you cannot make money, right? But on trends like this, you're gonna make a lot of money on those shorts, and usually get a pretty good timing on those shorts, right? Like right here, you get really good timings right at the top that you're gonna get the short signals. It's knowing if you're going to use it to aggro, you need to know when it's trending and when it's choppy. You want to avoid the chop days using the aggro, and you only want to ride the trends. And what it does, you'll keep you in the trend longer. That's what the aggro does. It helps you stay in the trend. So if you have an issue of taking profits too early, just follow the aggro. When you know it's a trending day, just follow the aggro. How do you know when it's a trending day? Well, that's something I teach, right? And basically what you're looking for is higher highs, higher lows, and let the moving averages guide you through the trade, right? So it's very basic and it's very easy to follow if you know what to look for, right? Anyway, I'll see you guys next week. That's pretty much it. Good luck next week. It should be an interesting one, and I'll see you guys next time. Oh, make sure you like, subscribe to the channel, hit that bell icon for notifications. Thanks.